This signal leads to a recession every time. Every time. Maybe this time will be different. Maybe de-escalation of the Iran conflict leads to some major fall off in the price of oil, and the downstream effects won't be as bad as everybody thinks. But fade signals at your peril. Okay? Remember the old most dangerous words in investing? This time is different. We got a lot to discuss in today's video because it's going to affect your portfolio, your money, your bottom line, your family, your job. Okay? It's all at risk here. The stakes could not be much higher. And even dog coins are being affected. The bear case. Oil's 30% recession rule. Oil's 35% above its 12-month trend right now. Every time oil surges 30% plus above its long-term trend, a recession follows within 12 months. Now, Donald Trump politically cannot afford for that to happen. He needs an off-ramp, he needs de-escalation, he needs it sooner than later. Okay? 1973 oil embargo, 1974 recession, 1990 Gulf War, 1991 recession, 2007, 2008 oil surge, 2008 financial crisis. Now look, oil did not cause the 2008 financial crisis, but the parallels are very, very interesting regardless. Moody's giving a 49% probability recession starting in the next 12 months. So get your coin, flip it. That's going to tell you the answer if we get a recession or not. Okay? That's what we're looking at right now. The market crash is here. It's happening. It's real. Okay? 28 days of war at the time of recording this. A couple more days now, of course. Pre-war oil, February 27th, $70. That was, of course, already pricing in that there was likely to be some kind of aggression against Iran because the month before that it was at $60. Okay? As the ramping up of war started coming, prices started moving. Oil's already peaked at 119 on March 19th. Earlier this week, we saw oil go back down to $88 a barrel after Trump talked with somebody somewhere. Iran rejected that initial 15 plan offer. Oil's then spiked to around $105, $106 at the time of recording this video. The market is held hostage to headlines right now. The VIX, the volatility index, is up 50% year to date. The S&P 500, 4 consecutive weeks of losses, down 6% from its January peak. Recession now more likely in the second half of 2026, says Moody's. Perfect timing for the midterms for Trump and the Republicans, isn't it? The damage is already done and is continuing to be done with fuel rationing, fuel shortages already happening in some countries around the world. The S&P 500's down about 6-7% off its all-time high. NASDAQ's down, the Russell's down, okay? But it's not just the indexes, okay? It's deep beneath the surface, and it's multiple crises happening at the same time. 97% of software and services stocks in the S&P 500 have been 10% below their 52-week highs. Okay, we talked a lot about how the software apocalypse is coming, because guess what? AI is destroying a lot of value in the stock market while creating new value, but the destruction has to happen first. Hundreds of thousands of people potentially losing their jobs. AI unemployment crisis is heating up. Private credit's a bubble. And a war in Iran. Couldn't have much more perfect mix for shit to hit the fan. Okay? 50% of all Russell 3000 stocks have already gone down into a bear market. It means they're 20% below their previous highs. Most portfolios are already feeling the pain. Okay? The bond market is saying that this war is unsustainable, that Trump will need a taco and taco soon. Okay? In war times, bonds are supposed to act as a safe haven, but yields are rising. Things are breaking. This is not supposed to be happening. Okay? The savings shield is gone. So back in 2022, we had all stimulus money floating around, right? And we had a horrible bear market in 2022. Stocks like Meta went down 75%. Bitcoin went down, 80% or 75% or whatever. Personal savings rate was 7% in December 2021. People actually had a lot of cash on hand. Credit card debt was manageable. Consumers had some buffer versus the $5 gallon of gas. 2026 is a very different situation. Consumers have basically been in a stealth a stealth recession for years already. Okay? 2023, 2024, 2025 was not kind to people. Okay? Unemployment's been sticky. Inflation's been sticky. People are suffering. People are struggling, okay? Savings rates are at near record lows right now, meaning nobody has any money to buy the dog coins, to buy the stocks, right? It also means that as economic hardship gets higher, things start breaking in the economy because people don't have money to buy almost anything at that point. $1.28 trillion in credit card debt. Consumers can't absorb $4 plus gas prices. There's no fiscal buffer and no stimulus on the way, at least not yet. The Fed may need to do some kind of QE as a response to this. But anyway, so there's no cushion. When gas goes up, people get hit harder. That's the real economy. Okay. Now, before we get into the rest of this conversation, guys, if you're not in the inner circle yet, you got to check it out. This group's absolutely amazing. I'm so proud of what we built over here. There's a link down below. Okay. You'll get a 7-day free trial when you sign up. In this group, it's me, my team of OG researchers, our incredible community. And when you join up, you're going to get long and short calls on crypto, stocks, and metals. Okay. You're going to get our trading signal bot. You're going to get our Agent Lark bot, which is an incredible AI tool for analyzing cryptocurrency markets and cryptocurrency coins. You're going to get a weekly altcoin report, a weekly tech stock report, and much, much more. Okay, that's just the tip of the iceberg of the value. Go check it out. There's a link down below, and you get a 7-day free trial. Love to see you in there. So, all this is happening. The market's still relatively high. The S&P 500 has not dropped 30, 40, 50% yet. People are still holding on to the belief that Trump will taco and that this will last a lot shorter than most of the doomers out there are telling you that it's going to last. But the Shiller-Cape ratio is 39x right now, the highest since the dot-com level in 2001 at 44x. The multiple expansion trap, investors are paying record prices for future growth while earnings are just not keeping up. Now, the market has a lot of room to fall. There's always a thing at tops. It's a long way down, man. It's a long way down. And while we have a slow grind up, we usually jump off a cliff to go down. Okay, because everybody runs for the exit at the same time. JP Morgan saying watch out for 6,000 on the S&P 500. Goldman Sachs 5,400. Bitcoin probably goes down into the mid 50K range in this scenario. Okay, waiting for the bottom. We're going to go higher, right? So here's the thing. I don't want this to be a doomer video. I don't like doom. You know, I'm an optimist. Okay, sometimes problematically so. But anyway, I'd rather be an optimist than a doomer. Before you panic sell everything and move 100% to cash, history is a cheat code. In every single geopolitical crisis of the last 50 years, Iraq, the Gulf War, Ukraine, Russia, markets panicked hard, but then recovered even harder. So the question isn't whether the markets recover. The question is, are you positioned to profit when the markets do recover? That's the question you need to ask yourself. Do you have cash on the sidelines to buy the blood in the streets when everybody's panicking? Okay. Here's the 30-day panic rule. Gulf War 1990. Bottom in 28 days, market plus 57% in the next 12 months. That's crazy talk. Why was I not alive in Well, I was alive in 1990, but I was 5. Was not trading the markets. Lark, come on, man. You should got a brokerage account. Traded some stocks, man. What are you doing? Iraq War 2003, bottom in 21 days, plus 38% next 12 months. Ukraine, bottom in 19 days, market recovered in 9 months. Interesting. Very, very interesting. Now, perhaps we have more similarities with the 2022 crisis because of the unique situation of the energy crisis that we're facing right now, the economic repercussions of that, the soaring inflation potential, the private credit bubble, and the AI unemployment crisis all hitting at the same time. So, what's the Iran suicide mission logic here? Iran needs oil revenue to survive, and a closed strait closes their own economy faster than the U.S. Okay? They need the strait open more than anyone else. Okay? If the strait reopens to broader traffic, and Iran has basically said anybody who's not Israel in the United States can use the strait. All you have to do is pay the road toll, which is $2 million per ship. Do that and you're good to go. Pay us in Chinese yuan and go about your way. We're not going to blow your ship up. Just pay the toll at the booth. Have a good day, right? Except America and Israel, you're not allowed, which is fair enough for Iran being bombed by America and Israel. But ships are starting to move, but not a lot of ships. Insurers still don't want to insure ships going through the strait even to pay the toll. Okay, so there's still problems, and strait traffic is still 1/100th of what it was, or 1/50th of what it was before the crisis. Okay, so how to read the markets right now. Clock A, the economy. Oil prices up, savings down, private credit blowing up, bonds blowing up. This clock says be very careful right now. Okay, clock B, the sentiment. We're in the 30-day war panic window. History says we're near the bottom. This clock says be brave. Okay, now escalation can keep going. The Red Sea Strait can be closed. Iran can go nuclear option on everybody, you know, not actual nuclear weapons, but I mean like blowing up all the Gulf oil facilities. There's a lot that can still play out, okay? Just FYI. So what happens next? Here's your cases, okay? Here's how to play it. Bull case, straight reopens, we get rate cuts, Iran backs down, oil falls, Fed pivots, S&P 100 rebounds to 7,200 by year end, DCA buyers win. And I've been buying, okay? I've been buying recently. And I'll keep buying. Maybe it's a fool's errand. Base case, slow burn, stock pickers market, conflict drags on, market stays volatile, S&P 500, 6,200 to 6,800 range, but we don't get full-on terrible consequences. There's enough oil flowing through the strait from other economies that things kind of end up being okay-ish, even if they're not really okay, okay? Energy, defense, patience is rewarded. Bear case, full recession hits. America tries taking the islands. Iran responds, blowing up Gulf oil facilities, mining the strait, shutting down the Red Sea passage. 25% of the world's oil is offline overnight. Global depression. Thank you very much, Donald. We are indeed tired of winning. Oil stays $100 plus, 150 maybe. Larry Fink said if you have a $150 barrel of oil, it's a global recession. Guaranteed. Okay? Consumer spending collapses, unemployment hits 5.5%. Inflation goes absolutely nuts. S&P 500 falls to 5,400. Buy the bottom if you have any money left in that situation and pray. Hug your kids. Call your parents, tell them you love them. That's it. Bye.